Put the gold, and as crazy as it sounds, Kai, you put it at 142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. He said something to the extent, and I quote, Poland owns gold because when someone shuts off the power to the digital financial system, a system where all the electronic accounting records are held digitally, we hold gold because when that happens, we will have the ability to rebuild our system. Gold is held in every central bank balance sheet, ironically enough, in an account called the gold revaluation account. You have the head of the Dutch National Bank who's been advocating for revaluing the price of gold for a very long time. This isn't a new topic, by the way. I mean, Roosevelt confiscated gold in April of 1933, paid everyone $20.56 for their $20 gold piece. That 56 cents 100 plus years ago had significant purchasing power back then when a loaf of bread was a nickel, and you're getting an extra 56 cents for every $20 coin that you turn in. It had significance. People were happy, and then immediately he devalued the dollar by 40%, making gold $35 an ounce. And so it was revalued in essence. And we saw the same thing in 1971 when Nixon closed the gold window, only it was revalued by the market, not by a central authority. The window was closed at $35 an ounce, and here it is today at over $2,700 an ounce. It was revalued. To bring it closer to home, Senator Loomis from Wyoming, Cynthia Loomis, at the Bitcoin conference in Tennessee, speaking right after Trump, gets up on stage and says, President Trump is advocating for the Bitcoin Reserve. I am going to float a bill that requests the gold being held by the Federal Reserve on behalf of the Treasury is revalued, with the proceeds being used to buy the Bitcoin. And so the point of it is that it is an option where all of the central banks have been accumulating gold for the past several years. And before that, the most powerful bank in the world reclassified it the only other Tier 1 reserve asset in the world. And if you take a look at the progression, the BIS is not only the biggest bank in the world, they're the most powerful. They make the rules, they know the decisions. Why would they reclassify gold Tier 1? Why would the central banks be purchasing it at a level the world has never seen? And it's not stopping. October and November 2024, I haven't seen the December numbers yet, their purchases were double the 12-month moving average. And then equally as startling to me and telling is the repatriation. Over 40 countries have brought their gold back from the New York Fed and the Bank of England. India, as an example, bought more gold in the first few months of 2024 than they did all of 2023, and they brought all of that home along with 100 metric tons they've held at the Bank of England for a very long time. There is a drive to repatriate the price of gold. There is a drive, or repatriate gold in terms of possession, and there is a drive to revalue the price of gold to reflect a balance sheet across the globe that are filled with liabilities. And as it is right now, gold is not allowed to offset those liabilities on the balance sheet and is valued across the globe at $35 an ounce on those balance sheets. It's no wonder the head of the Dutch National Bank or one of the main representatives at the Bundesbank say, yes, we have all this gold in the revaluation account. We should do something with it. So yeah, I think it is an option. It's a lot easier than inflating outright or defaulting outright. Put the gold, and as crazy as it sounds, Kai, you put it at 142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. And when I saw it come closer to home with Senator Loomis actually bring it up, I started to think, well, this is something that's on the table. They certainly notice it. It's 42.22. Okay. And I'm not exactly sure when they valued it and officially made it at 42.22, but all of the European countries, the Bundesbank included, is $35 an ounce on their balance sheet. And they call it the revaluation account. So in essence, if you think of a balance sheet, everything's balanced. They have their gold in their asset category, and they have the exact same amount in the revaluation account on the liability side. So they offset, because the way the rules are right now, you cannot offset a liability with your gold. What they're all saying is, let's put gold at a much higher level and write it off against all of our liabilities. And in essence, just like that, your balance sheet. Now, people will say, well, does that mean they have to sell the gold? No. It just means that their liabilities and their assets have balanced out, which would give them the ability to do other things that they otherwise couldn't do. To me, it's if you take a step back again and realize, why did the BIS reclassify it Tier 1? Why are the central banks buying it off the charts? And why are they repatriating it? I'm not saying it's going to happen, but I'm saying it's something they notice. It's one of these deals that it might just be too hard to pass up in terms of the benefits outweighing the drawbacks. Over the last several years, as the Americans have been chasing yield, leaving the banks, going to money markets, record $7.5 trillion in money markets. That's all invested in treasuries. The insurance companies, the pension funds, they're all invested in treasuries. As we have been chasing yield, the American public has been buying the treasuries. At the same time, most of the world has been shedding and rolling off their treasuries and replacing it with commodities. We only owe $7 trillion to the rest of the world. If we were to Jasara, in essence, just forgive the debt, most of it would be on the American people. It would be a lot easier to start over and reset it that way. But I don't think that's something that they want to do. This would kind of be it would, in essence, kind of be the same thing to a degree. But it would be one that would, I think, not immediately put the United States in a position of loss of credibility completely and totally. No one's going to trust them again if they just outright default. You look at the amount of silver that India's imported, almost 900 million ounces in the last 4 years, as you mentioned. Russia making it part of their strategic stockpile. China is gone from a net exporter to a net importer. They're flying all around the world to Peru and to South America in particular, disintermediating the market and buying directly from the miners. They're buying doré bars, which are a crudely refined bar, maybe 40-50%, before it gets sent in for further refinement. And they're buying concentrate, which is like a sludge byproduct of the mining and the refining process, and sending it all home, paying double what the West will, and having it refined further in China. 77% of all of China's industrial uses of silver is coming from concentrate that they buy directly from the miners, which disintermediates the marketplace. No one knows how much they're getting. It doesn't affect the price. They're the second largest producer of it in the world as well. And here we are again. We'll have a 280 million ounce shortfall this year again, which is the fourth year in a row over 1 billion ounces short. It's a structural deficit that's not going away. You had 47 million ounces delivered off of COMEX in December. Who's taking that? Where's it all going? On the LBMA right now, you have 800 million ounces. It's the lowest position they've ever had, because of that 800 million, 500 million belong to the ETFs. That leaves a float of 300 million ounces. They trade 290 million ounces per day on the LBMA. They trade the entire float. However, they admit to the fact that that trading is 10 times understated because they only post the final settlement numbers, which would mean they're trading as much as 3 billion ounces of silver per day, which is 3.5 times annual global mine supply. They have a 300 million ounce float against between 4 and 6 billion ounces short naked. 90+% of all of those short trades are naked, meaning there's nothing behind it but stupid commercial banks' ability to continue to suppress the price. And that's something that I think needs to be understood, because what it is a powder keg waiting to happen. And whether it be a delivery failure or a force majeure, on COMEX, silver is rehypothecated close to 2,000%, meaning 20 people hold a 5,000 ounce contract. If every one of them stand for delivery, one will be lucky to get the metal, the rest would be cash settled or force majeure. You have military industrial complex that needs silver. It is omitted in the supply demand numbers. If you Google H.2768, I believe is the number, that was a congressional hearing in 1942 where they basically they're talking about using silver for war purposes, and they said at the present rate we're using 200 million ounces of silver per year for military. Well, 3 years ago, when I gave a speech right here, right behind us, I said that there's 500 ounces of silver in a Tomahawk cruise missile. And a guy that was here yesterday and the year before comes up to me and he says, I work for the Department of Defense. I helped design the Tomahawk and the Patriot missile. I think you're right. I think there's silver in it. I'll let you know. He comes back last year with a stack of pictures. He says, this is all declassified, so I can tell you this. This is how we had to shoot it out of a platform in the ocean. Vertically, they were meant to come out horizontally out of torpedo tubes and all this stuff. He says, but you know what? You were right. There's between 13 and 14 kilograms in the cone of most of these high-tech missiles. That doesn't take into account the aerospace and the ICBMs. All of these super high-tech military applications need copious amounts of silver. So take a step back and ask yourself, why would 8 commercial banks be stupid enough to have the largest concentrated short position in any commodity ever traded in the history of COMEX on silver? Why would those same banks be short between 4 and 6 billion ounces of silver in London off of a 300 million ounce float? Because they're stupid, number one, as stupid as a mud wall, and number two, they're being told by very powerful people, in particular the military industrial complex, to keep the price low because they need it to make high-tech weaponry to sell all around the world. That's why it's happening. And the difference now is that the countries like China and India and Russia are not only coordinated and sophisticated and motivated, but they're wealthy enough to exploit the delivery mechanism. That is what is different. No one ever stood for delivery. These countries were not motivated nor coordinated to stand for delivery, and they are now. And that's where this ultimately ends. I look at silver as the most asymmetrical risk-reward trade I've ever seen. Lowest downside, best upside. And one of these days, look, the only way that you can successfully manipulate a market over time is to push it in the direction it's going. For a very long time, silver was very easy for these banks to manipulate. But being on the wrong side of a naked short right now in this market, where countries are actually including them into their strategic stockpile, where China is flying around the world buying concentrate and doré, tells me that this game has never been closer to ending. And really, they understand what we're doing, and they're using our suppression against us.